Good evening and welcome to Mint CXO Dialogues in partnership with Alexander Hugh. Mint CXO Dialogues is a platform where we engage with India's leading tech communities and discuss how technology in its various forms is affecting the core sectors of business. In today's session, we look at the partnership between technology and the BFSI sector. For the last 5 months, we would have seen that the pandemic has accelerated the adoption of technology, and the BFSI sector is no exception. With banks already implementing the e-KYC based digital onboarding of customers, the new entire value chain has been deeply altered by digitization. Financial services these days leave therefore little or no room for human error. Emerging technologies like AI, machine learning, RPA have revolutionized financial services. But even as financial institutions nudge their customers to use online transactions, store more data digitally, and also move to an anywhere or presence less service model, they also need to build their infrastructure. That's the digital infrastructure. So, to discuss this and more with our stellar panelists for the evening, I invite Vijay Mani, partner Deloitte India, to moderate the session.
Thank you, Gopika. It's a pleasure to be here. It's a very interesting topic. And what I'll do right away is invite a very distinguished group of panelists, very senior and seasoned executives from the banking and insurance sector. Let me first invite Deepak Sharma, who's President and Chief Digital Officer at Kotak Bank. Deepak, it's a pleasure to have you. We then have Jay Pavani, who's Chief Operating Officer at HSBC India. We also have Kush Mehra, who's Chief Business Officer at Pine Labs, one of the leading payment processors and merchant acquirers in the country. We have Mithun Sundar, who's Chief Executive Officer at Lending Cart, one of our leading lending fintechs. We have Shankara Narayanan Raghavan, who's Chief Technology and Data Officer at India First Life, one of our leading insurance companies. And we have Sumit Pathak, who's a digital workforce evangelist at Automation Anywhere, one of our leading automation technology companies. So I'm very pleased to be in the company of a very seasoned group of panelists, and I'm looking forward to a very engaging conversation. Do we have Deepak on the line? Okay, I guess not. Let's get underway. So just to reiterate, the theme of the discussion is over the past 5 to 6 months, we've seen a lot. Each of us have become more intimate with our mobile phones, laptops, and iPads, if ever there was scope to get more intimate. And I'm sure that's the case with a lot of people across the country, across metros, urban areas, non-urban areas, and that is forcing a lot of change. And the key theme of this discussion is to figure out what is the outlook and what are the plans for technology adoption by banks and insurance companies. So let me kick it off by picking up of one important theme here, which is the importance of the digital channel vis-a-vis the physical channel. Right? What is going to happen to the concept of a bank branch or a physical outlet for an insurance company? What is the role going to be going forward? Is there a role, and what would that look like 6 months down the line, a year down the line, possibly 2 years down the line? Let me invite Deepak to kick off that discussion. Deepak, your thoughts on the changing role of bank branch going forward? Deepak, we are unable to hear you.
Yeah, hi.
Yes, loud and clear now. Please go ahead, Deepak. We can hear you now.
Sorry, I just, can you just repeat that?
So just wanted your thoughts to begin with on the changing role of a bank branch, given all that we have seen over the last 5 months. Do you foresee a change? What is the nature of that change? Your thoughts from banking perspective.
Yeah, sure. I think COVID definitely has brought in a significant channel shift. The way customers looked at channels of their choice, while digital channels like mobile and net was always a preferred channel for a lot of transaction, but a lot of transactions still used to go to branches. But I think today we see almost 90% or 95% of transactions have moved out of the branches post COVID. So unless there are really reasons for customers to visit a branch, I don't see that's happening. In fact, we have also seen a very fast adoption of channels like WhatsApp banking and conversational banking bots. So it's not just digital channels, which were typically what mobile and network, but today all the channels that we see around the conversational channels, messaging apps, the voice-based smart speakers, all these channels is where we are seeing significant shift. And I think some of the other initiatives in last 4 to 5 months, like the whole video-based KYC that we rolled out, and then it's becoming now industry norm. Even for acquiring or onboarding a new customer today, there is no need for a physical or a face-to-face interaction, at least for the saving account customers. Very soon, we will see this even for small businesses, for loan origination. And I think as more and more journeys end to end get stitched and delivered digitally, I think the reason for customers to go to the physical world will only be far and few. Might take even after I think we come out of COVID, a lot of this habit and shift that we are seeing will continue for long. Uh, Ideal mix in my mind would be about 80% digital, 20% physical in about a year from now.
Right. And Deepak, do you see a reduction in the branch footprint and optimization of the branch network to respond to this trend?
I don't see it will lead to essentially the reduction in the branch footprint, at least for bank like ours, because we always looked at optimizing the distribution with limited branch footprint. And I think what we will see is the branches will get repurposed for sure. That means the size of the branch or moving transactions outside the branch, but still advisory and some richer interaction maybe in the branch. But
Okay.
yeah, till such time, the cash is going to be in the economy, and today the data showed that cash is only increasing. I think the relevance of branch around cash for small businesses or current account, I think that's not going away unless we see a mass migration uh, from the cash to the digital or the other forms of payment.
Thank you, Deepak. Ajay, could we have you weigh into this discussion from a foreign bank perspective? How are you looking at the role of the branch going forward?
Yeah, sure. Can you hear me, Vijay?
Yes, we can hear you, Jay.
Yeah. So, I mean, much like what Deepak said, right? I do think the branch is here to stay. I mean, but the role and the shape and the size of the interactions in the branch will change significantly. I think what COVID's done is definitely accelerated the whole digital adoption. But it's a bit like the ATM story, right? When ATMs came, people said tellers and branches will go away. When contact centers came in the 90s, they said the same thing. When the e-commerce sort of boom happened in the early 2000s and e-banking became the norm, people said the same about branches. So in some ways, it's not so much whether these are mutually exclusive. The question really becomes how do they complement each other? And I think the right word to say is richer interactions Deepak used, right? So there will be more FaceTime quality conversations in the branches that will happen.
Thank you, Jay. Shankar, from an insurance perspective, I know the insurance business is different. A lot of use of agents. What is your view of the changing role of the physical touchpoints with customers in your line of work?
Insurance all along has been completely a traditional way of business was done using traditional ways, correct? The agents and meeting people in person, and then because the trust has to be built, and it's about a promise. So all along it has been like traditional majorly, and with digital being very, very insignificant stuff so far. What has happened, the COVID has done is that, yes, it has changed the mindset. For us, fortunately, I think we started the digital transformation long back. We started emphasizing on onboarding the customers using a tab and all those things for 2 years now. So it has helped us to move in seamlessly, but the mindset has to be changed, correct? So what we did is that we started doing some sort of something called Garbaite insurance, so that people can sell insurance from their home, right? So I think this is what most of the players have also seen. So digital enablement of the traditional channels is what has happened, and people started believing that these things can also happen, correct? They started using the tablets, they started using the web to sell, and yes, we have e-KYC, and yes, the medical norms have changed, so we started doing tele-MAR, we started getting into the other ways of assessing the customer on the medical front. So it is all about adaptation and changing the mindset. I think April being a lean month, we did see some sort of a slow adaptation happening, but in the last 3-4 months, I think it has been a great journey. I think people started seeing more number of started using the digital vehicles to sell and also to service customers. I think last 2 months there has been a good uptake. Like Deepak mentioned, maybe in the next year or so, maybe digital sales maybe move to 80%, and then from a traditional sales. When I say digital sales, it's going to be traditional players selling, adapting digital vehicles to sell insurance. So that's what's going to happen, and that we are seeing this being seamlessly getting adapted. We were behind banks, correct? But yes, but we are moving ahead of banks. Maybe in the next year or so, maybe we will adapt much more. That's how I see it.
Interesting. Thank you, Shankar. Let's now talk about a particular customer segment, which is small and medium business. It's been a huge engine of growth for the economy. Used to contribute 30% of the GDP. A segment that is under a significant amount of stress because of COVID. Deepak, your thoughts on how banking for small and medium businesses is likely to change? What are some of the trends that you're seeing? What is your outlook for how servicing this segment is going to undergo change going forward?
So I think today, even small businesses, we are seeing a significant mind shift in adopting digital as a channel for banking. I don't see that as an issue today at all across, be it micro, small, or medium enterprises, the way we look at it. I think the challenge here is not about customers' readiness. As I said, there are two issues that I see. One is still wherever the businesses are using cash, I think cash still necessitates them to come to a physical channel. And some of the customer journeys, especially around the onboarding, KYC, that part largely still remains physical. That is not yet fully digital. So that's not about customers not getting ready. However, I think I see a big upside on this whole SME side is on the credit. For example, today, the working capital limit extension, or customers who are asking for a top up on their existing loan. So wherever KYC is already done, there is a way to do a credit assessment on an ongoing basis and extend them incremental credit. Thanks to the wider adoption of GSTM, again, across all the segments around SMEs, today, right from getting them onboarded or probably looking at them for a payment or for trade finance or for cash management, I think we are going to see a lot more happening around that. And this is also an area where banks are working with non-banks like accounting platforms, the inventory and the supply chain management platforms, to see that how we can get the data to build either the credit underwriting or transaction processing or reconciliation. So this is a big opportunity. I'm not saying that we have done everything, but I think customer readiness is there. And we are seeing rapid progress, be it on credit, underwriting, transaction monitoring, customer onboarding. And I would say next year to 2 years, I would bet that if any segment will see significant leap, it's going to be SME.
Great. Thank you. Thank you, Deepak. Kush, I'd like to bring you into the discussion. You service a significant portion of the SMB sector, which is all the merchants in the country. From your perspective as a payment service provider, how do you see your services to merchants changing? What do you see as their emerging requirements? Any trends from your perspective, Kush?
Sure. So I think firstly, I fully understand Deepak's thoughts that when we look at the space of, MSME or SMEs as we call them, and especially in the merchant side of business, we find this segment to be the most buoyant. In fact, the maximum, I would say, the adaptation to digital modes has actually come from MSMEs in our case, as we went into the COVID situation and as, slowly businesses are opening up. And I would say that this segment was largely cash only. And back in the day, we would go and try to, remove a phone line linked point of sale terminal and, try to push a terminal which had a SIM card in it because, the merchant could hold it in the hand and, found it convenient. But then the challenge then was that telco connectivity was an issue. The consumption of data was expensive. What has happened is we have seen this major shift that has happened over the last few years, that when we talk about an SME or a micro merchant, the store environment of an SME is very conducive now. So, they all have, by the way, for example, a lot of research we did on this, about 70% of all micro merchants, and you can actually put like 10, 12 million of Kirana store guys and another 10, 12 million of MSME, the medium-sized merchants, they all obviously have a smartphone, right? So you have a connect point where somebody is already using a smartphone. The merchant is already hooked on to a couple of business apps which are relevant to their businesses. So think of it like this, that I have a Swiggy app on my phone. I'm a restaurant guy. I do deliveries. So they're already doing commerce on the phone, right? Connectivity is not patchy anymore. Data is cheap, right? So what we've realized is that as a payment company, as we are going in, we are seeing these merchants really come forward and say, hey, by the way, firstly, I'm not only looking at a point of sale terminal. You need to connect me for every type of digital payment that my customer would be willing to pay with, which means a lot of thrust on phone-based, banking, phone-based payment instruments. So we actually launched in the last 3 to 4 months. We actually launched some products which actually allowed a merchant just to download an app and then start sending links to customers because there wasn't that much face-to-face interaction. The response was so overwhelming that in like the first couple of months, we saw some 50,000 downloads, all self-service, SME merchants downloading it, doing a digital journey, getting hooked on and starting to transact. So I feel as we go on from here, one, in a way, I would see a long-term, benefit of people kind of doling out less cash and wanting to pay with digital is going to see a very quick adoption of these merchants as a community to get hooked on to every form of digital than they ever did in the last probably 8 to 10 years. So I think again, a lot of resilience, a lot of growth. Best time to actually go in and start plugging in more and more digital transactions in the very large markets which are tier 3 and tier 4 cities and towns in the country.
And your thoughts, Kush, on the viability of the business model for servicing these merchants, given the trends on MDR, what is your view on how these businesses can become viable?
So a couple of things. I think firstly, one thing which is again a shift from just looking at is actually becoming like a platform business. So I think when we also go in, by the way, a merchant doesn't want to sign up for just a point of sale terminal anymore. Like I said, to begin with, the proposition is more complete. So the proposition is more linked to, obviously there's payments that you'll run on it, but I'm also going to power on things like, accounting management module on it. You could do a ton of, your billing transactions sitting on it. It also helps you, apply for a quick kind of a, working capital loan product from your choice of bank or NBFC. What we've realized is that if you can really carve out a proposition which is complete in that sense, that's actually trying to touch at different, needs that the merchant wants to be fulfilled through a platform, the market is willing to pay. When it comes to standalone MDR, I feel given the way the UPI adoption has been and the ramp up has been, and it's pretty much close to being like a free transaction, right? I think that has really helped, get a lot of merchants onboarded into digital. And I feel that over a period of time, we strongly believe, obviously, economics would come back. It won't remain a free transaction because it takes the fun out of the business. But what we feel very strongly is that even when commercials start to come back into this, and it becoming an MDR game, you would not see merchants falling off. So I think it's a great approach. It's really kind of investing in getting these guys onboarded, and once they get hooked onto it, they'll see the merit, and which they already are, and the market will be willing to even pay a few transaction basis points.
Great. Thank you for that, Kush. Mithun, your point of view as one of the leading lending fintechs, SMB is an important segment for you as well. Your thoughts on in the current stress scenario, how are you looking at this segment going forward?
So,
yes.
Can you hear me clearly? I'm just checking for the sound first. For us, Lenica today, has about 2,500 crores assets under management, and for us, MSMEs is the only segment, not just an important segment. It's the only one that we, at this point, do business with, and all of this has been built on the MSME segment. We are cautiously bullish about it. What I mean by that is this, right? I think as a segment, there is a lot of resilience to the MSME segment. There are about 65 million MSMEs in this country, and last I remember when we checked, access to formal credit for their working capital is only given to about 10 to 12% of them. Now, these are not unbanked. These are people who are typically graduates. They run a computer center in Guwahati, a small cycle shop in Madras. And they are people who have a housing loan, potentially a credit card, a loan against their property, a gold loan. However, for their working capital, because their businesses are typically small, the vintage isn't, very long, etc. They typically, for those, tend to take access of, capital from the common money lender down the side. And for those segments, to be able to bank them through NBFCs such as ours is a massive opportunity. Coming out of COVID, I think we are cautiously bullish. The reason I said was we saw that they were quite hit and transactions were very low over the April, May, June, July timeframe. But I've been strongly encouraged over the last 2 months to see that a lot of them have bounced back in terms of transactions, and there are significant variations in terms of industry cuts or specific geographies or places where it isn't coming back. But these are normally the businesses which come back the first because it's a neighborhood business. When people start spending, they're able to, and we have also cautiously reopened the tap in terms of being able to start to lend to them again. The biggest bellwether of whether they're doing well or not, I would say, is the kind of collections which come from monies which we have lent out in the past. And we are encouraged to say that has also started to look quite up, which means that their businesses' cash flows have started to, come back in shape.
Great. And with the uncertainty in the outlook, how are some of these alternative underwriting models? How are they? Are they undergoing some change? Do you see an impact on more riskier bets which would otherwise have been taken? Do you see some of that happening?
Yeah, so that's a fair question. We have all of the loans that we have until now over the last 5 years of our existence evaluated and given. We've given it based on an underwriting proprietary algorithm which looks at banking transaction data, GST data, and ITR returns over the last 12 months, and then decides how much to give that entrepreneur at what tenure and at what rate. Right, that's what we live on. Clearly, there's a large hole in continuity over the last 5 months, and that is going to change and make our algorithm, in a sense, have to struggle to do it. The question really is not whether I'm able to underwrite. The question is whether I'm able to underwrite in a predictable manner, because I think the risk return outcome and the risk profile of the customer stays the same, but the predictability of myself being able to say needs new variables coming in, which is why we are also cautious. Now, what does this mean for the future? I think there is, today we have a few people in the market who've got outside bureau scores, which only goes that deep. There are very few people in the market who have a scale solution for underwriting with a predictable NPA outcome. Right now, people who are able to make their whatever they have, and an example is what Lenica today has. People who are able to make their underwriting algorithm adapt and quickly be able to prove itself out over the next 6-12 months with additional data points coming in. And we are also looking at what else can we consume outside pure banking, ITR, and GST. maybe it could be social, maybe it could be geography, maybe it's a demographic, and we're putting all of that in to be able to consume and make a difference, will be the ones who come out very successful because that product will be valuable. And it goes back to the first question you asked. I didn't sort of respond to that, which is, what's the value of the branch model, right? Today, we, Lending Card, have two offices. There's one in Ahmedabad, which is a head office where a lot of the operations happens, and one is in Bangalore, which is, where our tech and product and marketing sit. We don't have a branch in the country anywhere. And in the absence of a branch, because the old, if you go back many years, the reason a branch existed is in that catchment area, the branch manager knows the people that he's lending to. That's the old origin of a branch. Yeah. And then there is a social proofing of being able to collect back from it. Now, as roles of physical touch points change to richer conversations and richer transactions, as several of my co-panelists spoke about here, I think the value of underwriting, because that knowing the person based on the clothes they wear or where they live or that street has gone away, and it's gone forever. So getting our algorithm to adapt is going to be actually, I think, the thing which is worth its weight in gold in the next 6 months.
Just one quick follow-up question. How do you see technology changing collections? Do you see some automation tools coming in, or is the Indian consumer not responding to those kind of technology interventions?
No. I think, there are two places where technology will make a difference in collections, and I think both of them, unlike a lot of what's happened on the sourcing side and underwriting side and payment side and disbursal side, collection, I think if I give payments as a 7 on 10, people spoke about frictionless transactions. Colleague from Panelists was just speaking about it. I would say collections from a technology curve is still at a 2 on 10. And I'm saying this across industry, not about Lending Card, right? And I see the technology intervention coming dramatically in two places. Number one, just internal processes. And this may sound simple and sort of trivial, but just making sure that we're able to really be able to have and this is the quality of the talent which has come up over many years of collections, right? Collections at one point in time in this country used to be hard. All of these are things of the past. Now it's about knowing who to call at what time. Calling a person up for a reminder at like 10 a.m. is very different from calling that person up at 4 p.m. And these are real cues that you need to be able to pick up lifetime. When you're doing it at scale, every bit makes a difference, right? So just being able to manage collection, tracking, transaction data, and consumer intelligence internally is, I think, a huge area of improvement. And there are quite a few, we've got a couple of startups that we are now working with, and you don't have to invent this, inside out. There are equivalents who are doing just that, and which we can plug and play into not just Lending Card, any bank. The second side, which was the question you asked, which is on the consumer front. See, consumers are already ready. I've disbursed and collected we don't have any cash transaction in my 2,500 crores of assets that we are now doing, either in the disbursal or in the collection, right? And this has been going on for the last 6 years, and it's only grown 50-60% year on year. So consumers are in a sense ready. The tip of the spear, which was payments, has made them more and more ready. They understand these transactions. They're able to do it. It's a question of just keeping it. The more you facilitate it, the more you make it seamless, the more you make it easy. I think that level, because pure transaction comfort is pretty high right now. Things like KYC, match, registration, making those and video, etc. Those are where there's a lot more of friction still. And awareness in general, right? Today you go in Google search, you get 100 options. Not all of them are equally good, right? Just the awareness of knowing where to, when you don't have a name brand recognition, like, I have a gentleman from Kotak here or from SBI here, just the name brand carries more. When Lending Card comes, it is still getting there, right? It's going to take another 5 years. Likewise with several other. So awareness improvement is more improved, and, middle of funnel correction for technology, I think, is where the larger bang for the buck is.
Okay, great. Thanks. Kush, a quick word from you on outlook for SMEs. I know you get a lot of transaction data. You have a ringside view of some of these merchants and how their business is doing. Your sense of the usefulness of that when it comes to making sure that credit reaches them.
So, I guess Mithun made some really, really insightful point, brought out some really good insights onto how he looks at the space. And when we marry that to, again, our world of merchants, absolutely, I tend to agree. Firstly, I feel that, these are steps in the right direction in terms of trying to move to a full, digital KYC being the experience. And then now, slowly moving on to doing video KYC. I think this used to be the most painful exercise for people like us. I would say about 2 to 3 years ago, For us to be, in the money flow of the merchant, that means that, we are going to set up the merchant, and we will also do the settlements for the merchant for all transactions on a T+0, whatever T+1 basis, required a lot of legwork. And, the moment it went to the SME being a space, the economics didn't really always work out, right? That is something that we are seeing, where there is a massive shift. And thanks to our bank partners, and thanks to the new policies, and thanks to RBI, I guess that part is getting very nicely, streamlined. Because of that, because of the process becoming easier for a merchant to set up complete KYC, not always requiring like a wet signature, and kind of from start to end taking like a few minutes, to start, kind of accepting transactions and digital payments. That has opened up a whole new opportunity for people like us to get every merchant we sign on like a full KYC, right? Get the merchant set up for settling transactions. So now the money flow in our case for all transactions happens through a settlement flow that we have set up at the bank. The beauty of that is that today the use case is very simple, that all transactions come to us, we deduct and we pay the next day. But the beauty of that is that a new use case that we are developing now is actually to do with lending, because you've got a ton of data, you're seeing all the flows, all the trends of the merchant, right? So there's a lot of rich data available. Now the merchant can sign up for a quick working capital loan, which could be like 2 lakh rupees to be paid over short tenure, and we can help merchant rather than making bulk one shot let's say ACH linked payments as EMIs. A merchant has the choice to actually part pay as a repayment of that loan amount every day from the swipes and the QR transactions that are coming to the settlement account. And we feel that being the flow actually doesn't suck out the cash flows and the daily cash requirement of a merchant. We actually set aside like 10% goes towards repayment and 90% comes to your settlement account. It doesn't hurt much. And merchants actually want to sign up for doing top ups. So I feel as long as the algos are in place, like Mithun was mentioning, the products are curated for this segment of merchants, the experience to avail a loan is easy, seamless, the market is huge. And I think we will really want to double down as a company to address this requirement for credit for SME merchants in the short to long term.
Right. Thanks, Kush. Sumit, I'd like to bring you into the discussion. From your perspective as an automation technology provider, where do you think banks or insurers, for that matter, can really push the boundaries of technology to make a difference to the consumer? Or what do you see as the big opportunities?
Sure. So thank you for that, and good evening, everyone. So interesting perspective from everyone. And in last 30 minutes, I think one thing which stands out for me is that the digital adoption has led to force the behavior of the customer. Now, it could be B2C or B2B. I think our expectation is that everything should happen immediately and with as little touch points as possible. What we are seeing, and basically that's also leading for banks to change their processes in that way. And they are digitizing it. They are using artificial intelligence, RPA, cloud, big data analytics, and also devices, as we were talking about it, right? And we are seeing several processes like KYC, which we spoke about, is completely getting digitized. And so while on the channel side it's getting digitized, there's still some manual work which we are seeing, which happens at the back, which requires automation to process data and sorts. We are seeing cross-border payments getting automated, trade finance, and the sorts. If I were to zero down, say, some of the areas which we are seeing more so now getting a lot of focus is certainly the onboarding of the customer is one thing which we have seen. While it's being digitized, we still believe that there is some paperwork which is involved at the back, and how do you make the entire chain automated? So that's where automation is being used heavily. But in trade finance as well, we believe that there is a lot of opportunities right now. Like, for example, when you're processing documents like application form, bill of exchange, commercial invoices, and the sorts, or in the compliance side, where you have to look at AML, right, or you have to look at the credit limits and the sort. So these are the areas which still requires a lot of hand-holding and manual effort, and we see these areas where automation is still has a lot of scope and is being looked at by the big organizations. Yeah.
Great, thanks, Sumit. Let's now talk about another big customer segment, which is the large enterprises, corporates, and the whole domain of wholesale banking. Jay, from your point of view as a bank that services these large enterprises and focuses a lot on wholesale banking, what is your sense of how technology might change wholesale banking going forward?
Yeah, so I think, just to build on what Sumit was talking about, right? Let's take one segment of wholesale banking, a product called trade, right? So, and if you look at trade and if you break it up into two broad segments, open account and doc trade, open account is already fully digitized, right? And if you see the adoption of that, it's been quite phenomenal over the last year or so, yeah? Even on the documentary trade side, there is so much work happening in terms of digitizing the docs that are there. And there are a lot of pilots happening using blockchain as a concept as well, right? So it's just a matter of time before some of this gets commercialized. Onboarding is another area in the wholesale space where, perhaps they were sort of much behind the individual retail customers in terms of adopting to technology. But a lot of treasurers, a lot of corporate folks are now asking or demanding for the same experience. And I think the COVID experience has really sort of put the light on them to say, you have to sort of adopt faster. And I think we're seeing a lot more sort of demand and appetite even in that space, right? As another example.
Okay. And, as we look at all these technology changes, one question that comes up is, how resilient is our use of technology, right, in these areas? What is your viewpoint on that, Jay?
Yeah, so that is massive, right? I mean, just take payments, the kind of volumes that are going through payments today, as an example, right? And you have these big days with Amazon or Flipkart and all these boys doing sort of big days. So the resilience of technology and how we can sort of sustain some of this is absolutely important, especially in a market like India, where the last mile connectivity often is an issue. I mean, I've been dropped on and off this call at least 3 or 4 times today. Okay, so that just tells you some of the travails of some of the challenges from a digital adoption from an India perspective. So I think resilience is absolutely key. If you take COVID as an example, the number of staff that across the board, all banks in sort of BPO or ITES sector has got to sort of enable to be work from home is just massive. And right, and if you see that shift happened at a very sort of short period of time. So from basic stuff like UPSs at home to, the right kind of technology infrastructure to do trading from home. These were things kind of unheard of, right? So I think resilience is an absolute key piece as we scale up and digitize more. And it needs to be really looked at at a more sort of fundamental level, because we've always got used to having a resilience or a BCP, which would be in 2 cities, and you'd have 2 operational teams sort of picking up one from the other, right? That's the traditional kind of resilience that we've had. But in the digital context, it's going to be very different. And the transactions per second for peak volume days for large transactional sort of banking areas like payments, for example, is another element of resilience that we all need to focus on.
Thank you, Jay. Kush, your perspective as a managing a large payment network, what are your thoughts on resiliency? What do you think are points of vulnerability, and how are you looking at the response to that?
See, I think the moment you talk about payments, right, and this is where you are actually, talking about managing sensitive financial information of customers and merchants. I feel, resilience in technology to begin with has to be, resilience when it comes to security, in terms of the safety and security that you set up for your systems that are actually processing transactions. So one bit is to see how resilient it is to scale, which is probably still step 2. But step 1 is that, what level of benchmarking do you have in place that makes sure that there is full, kind of availability of encryption in every type of transaction and every type of data point that flows through a system. And I would say that, again, with all due credit, the way, our central banks have operated, actually, India by far has been, way ahead when it comes to putting security protocols in payment systems. So, for example, I'll give you an example. It's almost being like over a decade when for online transactions, India was the market that actually mandated all transactions to come through a two-factor authentication. It was early days, it obviously, the moment you're making people to adopt to higher security, it causes some inconvenience, right? So obviously there was some heartburn. And back in the day, people used to think, well, is it something that is really needed? And world over, you don't need a 2FA and all that. But we made that change, and we made it just in the right time before India was on the brink of, really exploding on online transactions. And till today, we reap the benefits of it. I think I remember in 2012 or 13, RBI came out with a mandate that said, effective, I think October of 2013 or so, all offline, which means in-store transactions, have to be on chip and pin, which needed a massive upgrade of infrastructure when it came to merchants, and a massive upgrade of actually even the cards issued to customers, because cards used to be mostly all max stripe. You just swipe and go. That change we made in 2013. That protocol or that security standard, we completed in 1 year. Started to get adopted in actually more mature markets like Singapore and Malaysia only in 2016 or 17. And by the way, markets like the US are still on the roadmap to fully migrate from max type transactions to chip and pin. So I feel these are things where we have really set the benchmark and the example. Any new technology that we actually all the time we're experimenting with a lot, but for us, more than the development and the build time for a new type of payment technology or a product, I would say there is additional time and effort that goes into making sure that it is compliant to the highest, level of security that is being laid out by these councils like, PCI DSS and PI DSS and all that. So I feel very confident that the systems are in place, the fundamentals are very, very strong. And I think as the country goes towards further digitization and better availability, or in terms of connectivity and infrastructure and and telcos, this will only scale. I don't see any challenge in in the scale bit of it.
Great. Thanks, Kush. Shankar, let me bring you into the conversation. There's been a lot of discussion around regulation and how banking has benefited from that. In insurance, we recently saw that IRDA has allowed digital policies for health and general insurance. Your thoughts on the role of regulation, and how do you see that in the insurance sector from a technology adoption point of view?
I think when someone mentioned it on one of the webinars in the recent past, saying that the tough times bring the best out of us as far as India is concerned, correct? I think the regulators have responded to the situation like, I think they're the fastest in my view, correct? Whether it is, I think more number of products might have got approved. One of the things is that Corona Couch is something which they have came up with that, and then they made the health insurers to launch it. So I think not only that, one of the things which used to be a wet signature and a policy, physical policy to be signed, they made it electronic, correct? This is something wherein, like I mentioned, the insurance is based on trust, and physical document is what people used to keep it with them and then say that, okay, I got an insurance. But now it's getting into electronic form, correct? So in fact, IRDA has in fact came up with dematerialization of insurance long back. But this is the time wherein I think they did away with the physical document, correct? They didn't do away with that at the time, correct? Now they have done it. I think otherwise, same way, the sandbox regulation, almost like 18 approaches have been approved, and they are going the third tranche now, correct? Whether it is going to be health, whether it is life or distribution, I think they are the fastest now, and they are giving, they are understanding what is needed for the insurers or the industry to survive, and they are giving that kind of support. Many more to come, in my view. I think in terms of distributed data, various other things, I think using other datas, and a lot of things are in pipeline. I'm expecting more things to come in. I think ease of doing business is what I think is going to be the key for the regulator, because the customers are looking for that, and insurers, manufacturers like us, we are also looking for that. So it's at the time. I think most of those things which we used to believe that it can't be changed are getting changed, and I'm expecting more to come.
Great. Thank you, Shankar. Let's now talk about advanced technology like AI and machine learning. There's been a lot of talk about the use of this technology in banking and insurance. Deepak, if I can request your views on on how effective has AI and ML been? What do you see as some of the areas where it has produced the best outcomes for banks, and which are some of the areas that are still yet to produce the desired outcomes?
So I think AI ML for bank today, I would say we have reached at a curve where we are seeing a lot many use cases and value that we are getting out of it. So I think just because of the sheer amount of data that bank had and various challenges that banks have in terms of cost to serve to customer or managing the risk and compliance, looking at overall operational efficiency. So there are set of business problems and opportunities, and obviously there is a set of data. These are the two things banks always had. And today, the way I look at it, both from Kotak and when I say overall as an industry perspective, there are three buckets in which we have looked at all our AI and ML initiatives. One is what is at the front, and that's what customer gets to see, experience, interact. That's typically the personalization, recommendation, the NLP based, the conversational AI, both voice and chat based, or probably using this today on the facial recognition and image recognition, which powers our video based KYC journey. The other part is what we see is in the middle, and that's typically where the operational, the robotic process automation using the cognitive OCR comes in handy. And the third is what we are seeing a lot more on the credit risk monitoring, early warning system, monitoring largely the transactions. So all these areas, be it in the middle, be it in the front or back, I think all three of these, today we are seeing a lot much of this is also getting used on security, on fraud monitoring, anti-money laundering. So things that probably is more from the reg tech perspective. And I think each of these today has a wider adoption, and I can only see this becoming core to what financial services is going to invest in.
Right. Thank you, Deepak. Shankar, your view on use of AI and ML in insurance underwriting, claims adjudication?
Yeah. So AML, like Deepak mentioned, has got many use cases in insurance as well. Where insurance is sold in a conversational way, we need to understand the customer. We need to pitch the right product to them, because a lot of products, customers will get confused which one to go for. What is the rights sum insured they need to go for? What is the premium they need to? What is the term they need to go for? And right from there it starts, correct? So the AI is being used, AML is being used right from the suitability and suggesting the product, wherein they don't have to play with tool, correct? Which is based on the set, we are able to suggest what is the right product, what is the right premium, other things. And also we are able to understand, put in some sort of right questions to them, correct? In terms of assessment, underwriting, which is being done in a very standard format. Some of these use cases are still in development. Like I mentioned, the standard format to questions, which are all going to be like a very, very specific, is not there at this point of time. We are developing that. But these things are something which is going to help in terms of not only processing, correct, assessing the right risk at the right time, and also to weed out frauds, correct. We'll be able to understand, okay, where and all it's coming from, what are the things which we can identify and then flag it off, and then which will help us to ask those inputs from the customer. I think it is right from the onboarding until claims underwriting. A lot of use cases are being used, and a lot of use cases are getting developed as we speak, because one of the things is the ease of doing business is needed, and where I think the AML is the one thing which is going to help us in a very, very easiest way and convenient way to not only help the sales guy, but also the operations in managing the risk assessment in a better way. These are all the places where I'm using.
Thank you, Shankar. Sumit, your view. I mean, RPA is one of the leading areas where you need to bring in some amount of cognitive. Your sense of how AI/ML is evolving in this market.
Yeah, sure. So I think, see, from automation anywhere perspective, we believe in a concept of digital worker. Digital worker basically creates the capacity and for human workforce, and that is to bring in your RP and cognitive technology together. Now, Deepak did and Shankar did mention about the use cases, and I completely resonate with that. And there's a lot more also, right? Both in front office and back office. But one more thing I would like to highlight is the purpose for which you want to automate. Right? It is not only what you automate, but the purpose. Now, what we have seen usually with our customers are that they are using technologies like RPA, ML, and AI or digital worker in more towards solving a problem. And that problem could be, say, for example, a cyclical nature. It could be that once a quarter there is a spike in certain piece of activity, or it could be an annual cycle where, for example, home loan goes off the roof for what if the interest rate goes down. In that case, how do you help the banks to respond to those sort of spikes, right? Instead of going out and hiring army of people, could you basically use digital workers to help them solve that? Second, what we are seeing is, I think Deepak did mention about briefly on compliance requirements, right? So when the compliance requirements come through, there's a lot of activity which needs to go through in terms of meeting certain timelines or meeting certain their requirements. I can give an example. One of our customers was requested to remediate all the existing KYC documents, right? Now there are millions of KYC documents. How do you do that? You can't go and hire hundreds of people to basically come in your office and do that work. And that's where you look at intelligent technologies like RPA, machine learning, and that was used to help identify the complete set of documents or the validity of the documents and go for it. In insurance, for example, again, it's as we have seen with pandemic, there is spikes in the new type of request which is coming through. Now in the call center, it is a complex conversations which are happening that is also impacting your BAU calls which used to come through. Now, how do you help in settling those claims? So we have seen smart settlements where you can use digital worker to up to a particular threshold of claims you can automate it, and then more complex ones is taken care by the SMEs or by the employees. So the purpose is to basically create that capacity, right, and help the end users or the SME to do the work which they are good at, which is solving the complex problem, and take away the manual activity from them.
Thanks. Mithun, your view, where's the real benefit? Where's the hype when it comes to AI/ML in the lending business?
See, I think more or less all topics, all aspects covered. So let me present something a little counterintuitive, right? Along with AI/ML, if you add robotics as well, you have everything needed for like every round of funding from Series A to Series Z. But jokes aside, see, I think AI and ML has a role to play in going narrow and deep into a problem and solving it. It's a question of if you throw a question to one of my credit algorithm writing analysts and say, hey, listen, can I get to an outcome which solves it with a 99.99% accuracy? The answer from him or her would likely be, hey, watch me, and we'll use an ML based algorithm to go rapidly and keep iterating till you get to something which has that 99% accuracy. My submission, different from what I think the rest of the crew had. I think I agree with a lot that was covered, but a different way to think about it is, I've been reflecting, and for the next 12 months, I think the skill set is lesser in the deep and narrow, but the required skill set in companies is probably in the wide and shallow. What I mean by that is this, right? Think about AI and ML as something which can throw more or less infinite ingredients into a blender and come out with a perfect solution for you, whether it's algorithm of underwriting, whether it's a sourcing question, whether it's a collection question, whether it's somewhere in between. However, what is getting undervalued nowadays is what I call the classic analyst role or the business manager role, which is to identify of the 100 ingredients to put into the blender, which are the 5 which really matter, which is a judgment call. And the reason I say that is a more important skill in the next 12 months is the world has changed so much that a lot of your historical data sets will actually start to misbehave going forward. And I think this intelligence is not AI, it's not ML, it's pure analytics, right? It's take a hypothesis, test it, go fish, come back and say, I think this is what it is because of this. And maybe you get a couple of them wrong, but you get 8 out of 10 right. And that is the So step 0 before AI ML, I think, is more critical than AI ML itself right now. Not to take away from everything else you said. Right?
Thanks, Mithun. Jay, your thoughts on AI ML? I mean, a lot of AI ML focuses on retail, large data sets. From a wholesale banking perspective, do you see a role for AI ML?
Yeah, I mean, look, I tend to agree a little bit with Mithun. I think, in a sense, you can't chase technology. Shouldn't chase problems, right? You got to have good problem statements, good use cases, and you should find the right technology to enable a solution. That's always been sort of my belief, right? So, I mean, are there use cases in the wholesale? Absolutely, yes. Like, for example, if you take a payments, right? Now, today, anybody and everybody can provide a payment solution. Now, what value add can you do on top of a pure payment transaction, right? Can I add an analytics piece to it and give something value added to a treasurer in the wholesale space? Can I do better forecasting of cash models that he or she can use better effectively? In times of uncertainty like this, how do you sort of make the best out of it? For sure. But can some of the AI ML only solve this problem? I don't think so. Like Mithun said, you probably need a layer of analytics, and you need a little bit of that human knowledge to come first, because AI ML typically is very effective at solving repetitive, the deep and narrow kind of thing that Mithun said. So, is there a role for it? Is there a place for it? Absolutely, yes. Is it in isolation? I don't think so. Is my answer. And in the wholesale space, there are tons of use cases. And just one example that I gave is the payments one, where I do think value-added payments, doing analytics at the back of that, both in terms of risk elements of it, but better sort of liquidity, cash flow for treasurers, and how do you maximize that? I mean, both are really good use cases or examples where it can play a key role.
Great. Thank you, Jay. I know we have about 5 minutes left for the 1 hour mark. I just wanted to close with one point. And Deepak, I'd like you to bring you into this question about inclusiveness. As the sector embraces technology, is it being inclusive? Is it largely focused on urban customers, or is the use of technology going to benefit non-urban customers as well? India versus Bharat. What are your thoughts on that?
Yeah, I think that's a great question. Because when we look at technology use case adoption, we still have largely the urban customers, customers who have access to data, device, and everything is built around the rich experience that we have all been talking about. Forgetting that we still have about 400 million customers using feature phone in this country. We still have a lot of customers for whom English is not the primary language. And as we are looking at the whole banking and financial service stack, I think we are working on 3 V's. We are looking at largely the voice-enabled interface, because we realize that while text is something which has been the primary mode on which all our banking or financial interface is built, as we look at Bharat, and that's what we talk of a billion user story, the voice and vernacular are the 2 key pillars. So building, I think, the whole banking interface or financial interface beyond English and on voice, and obviously the videos, is becoming largely the play. We are also seeing a lot of services like the Aadhaar enabled payment or Aadhaar Pay. Today, that is a big success in Bharat, because the simplicity of a biometric or an iris based authentication to receive a payment, or probably when we run the microfinance business, or we have a large agri and tractor business. A lot of these businesses, be it on lending or transactions or payment, is focused on rural, but it needs a very different interface to acquire, engage, and serve these customers. Some part we have extended what we built in metro markets, but now a solution for Bharat has to be thought and built in Bharat. And I think that's where within our own teams, we have created teams which understands what Bharat wants. And a lot of times, Bharat just doesn't want what we build and what we run for larger cities. And I think this is where one has to build and think grounds up in order to serve the financial inclusion problems beyond payment. I think today we think of Bharat and we think of UPI or Aadhaar Pay, but that's not just Bharat. For example, the whole e-Nam, the e-mandis, what the government is talking about, the procurement, how do we bring this whole APMC and the agri supply chain? A lot of those solution is where now the next leg of development around financial service and connecting with the other ecosystems is where I would say a lot of effort is getting put now.
Thank you. Shankar, your thoughts on India versus Bharat when it comes to technology and insurance?
I think I will add one more to what Deepak mentioned about the voice and multilingual. I think the products plays a very vital role. And in addition to that, even though yes, we have the Pradhan Mantri Jeevan Bima Yojana, I think the uptake has been very low, correct? So the penetration is also low. There is a lot to be done. I think though during this COVID period, maybe people will be thinking about insurance and other things, but it needs to be one thing which everyone needs to have. So from that, I think some sort of, I think while a motor insurance is a compulsory, whether a life insurance or health insurance is not a compulsory one, some health is being taken care by state to some extent, but life insurance, I think, is largely left off. So I think there's some sort of legislation is also needed to make sure that yes, there is an awareness and other things are there, but people need to have it, correct? Along with those things, the product plays a very vital role. The micro insurance is a very important aspect, where we call insurance khata. We open something using a village level entrepreneur and using CSC, you can buy insurance. All those things are there, but uptake has been very small, correct? There has to be a lot of trust because we can't be still talking about that insurance penetration being low. I think we should use this opportunity to make it more important, because when lives are getting lost, the economy of those families are also getting trouble, correct? So to make sure that we have to have some thinking on the legislation piece to make sure that life insurance is a must, is something which we need to have. I think that's how we can make India to Bharat.
Great. Thank you, Shankar. I think we'll close with some closing remarks from everyone, and then Sumit, I'll come to you for that, but I'll just give you some time to think about that. Let me ask Kush to comment on this India versus Bharat question from a payments perspective, and then we'll do a round of closing remarks from all the panelists. So Kush, India versus Bharat from a payment point of view.
Sure, Vijay. So I think I love the perspectives that all the panelists put forward. Closer to our world of payments and merchants, I would say, we're still trying to solve for people paying over the counter using cash, and then you're trying to get them onboarded to move from that over the counter cash to a digital payment experience, right? So we were trying to still focus on solving the basics, especially when it came to the country at large, right, in terms of the Bharat that you have in mind. And one thing we're realizing is that maybe like the first generation shopkeepers, most of them, we see them very low in terms of their awareness of tech, a little wary of taking payments through digital mode, still more comfortable on cash. But then the second and third generation, the family people who still run that proprietor store are more hooked on to digital. And when we started to build this journey in the last 2 to 3 years to say, okay, let's really go to a far and wide place, like let's not go to Jaipur, let's go to Bikaner and start getting merchants onboarded. This was exactly where we saw the problem was, because the way the merchant environment was in terms of awareness, readiness, right, how hooked on they were to understanding digital was not the same that it was probably in a Jaipur, right? I mean, they're both in Rajasthan. And we had to actually solve for really simplifying our processes, right? Making it easy for them to self-understand in terms of, is it a 3-step process that we can get them quickly onboarded? Trying to solve for, difficulty to procure documentation, right? Trying to solve for on-ground training so that, tomorrow, and there were a lot of these do's and don'ts, right? For example, consumers weren't aware in these small markets that the debit card they have there in their pocket is not just an ATM card. I mean, it was such lack of awareness that this ATM card, by the way, doubles up as a debit card too, which all of us here would think, hey, obviously, even kids would know, right? But we realized that you have to solve for those basics both on the consumer side and on the merchant side. Once you do that, you can build a lot on top. But this initial onboarding of getting the Bharat onto the digital journey requires you to really have a look at it from a very different perspective than you look at a merchant or a consumer in a large metropolitan city.
Thank you, Kush. Let's now have closing remarks. Sumit, we'll start with you. Closing remarks on technology and how it's going to change banking or insurance going forward.
Yeah, sorry. So certainly. So I think one thing which I've learned from today's session and which I resonate as well with is that technology is here. It's available. You got ML, you got RPA. As I spoke about, digital worker is available. I think one of the important takeaways is that when you're using the technology, see that how you can keep your customer or in the center and you can provide value. It's just not about looking and solving a particular small problem. You have to take a step back, see the value chain, think about the customer and help them to solve that particular problem rather than just apply technology or force fit it.
Thank you, Sumit. Shankar, closing thoughts from you?
I think digital transformation has got accelerated in insurance, and what I am expecting to see in the coming days is that it's going to further speed up, and like with the customer at the center, like what Sumit mentioned, is what is going to be, because without customers, I don't think whatever we are going to technology is not going to fly, correct, and we are not going to even get what we want. So I think it has just started or accelerated further. I think it's going to speed up further. That's how I see it.
Thank you, Shankar. Mithun, any concluding thoughts from you?
I think lots covered already. Maybe a couple of things. Number one, I think really the question on recovery is a question on what we feel about India's sort of recovery over the next 2 to 3 years. And I think if we believe that that is in sound footing and all the intrinsics are in place for that, then I'm confident that that recovery will likely be credit-led, because, for MSMEs without credit, it's going to be impossible to be able to recover. And in such a context, I think there's a massive opportunity for everyone on this table, including even my colleague here from insurance, to play a role in that credit-led recovery, and in the process create a bunch of impact. And in doing so, there's likely going to be a pretty solid flight for quality. I mean, just the only thing which comes back to my mind is we started March with about 10,000 NBFCs registered in the country. We reached, I think, July or August with only about 7,000 there. And this flight to quality goes on, meaning that we're going to have a few people who are going to do high impact work over the next 2-3 years to participate in this growth story. That's really my closing.
Kush, final words from you.
So, yeah, I think a lot has been covered here, and I feel definitely, like most of the folks mentioned, that tech is definitely an enabler, right? And the country, like I said, at this point in time, is the environment is most conducive for this digital transformation. Where I think there is definite need for continued, effort and thrust is going to be that, how do we make these platforms which are connecting to these SMEs more composite in nature? Because we see, even in our case, right, at many times we are solving for one part of the problem, but then there is somebody else who's solving for the insurance part of the problem, somebody else who's trying to solve for the banking part of the problem, and there's a third person who's doing maybe the cash management in the store, right? So what we feel that really for the industry to come together, all partners here to come together and build a platform that is, in a way, like all things commerce, as we call it, that serves the merchants' needs, I think would be the right way to go. And I feel, the right steps have been taken. The journey is still, there's a long way to go for us to cover.
Thank you, Kush. Jay, your thoughts in conclusion?
Yeah, so just to build on the strand about client centricity, right? I think it's not, the key is tech has been around. Some of the technologies we've talked about today have been around for years, right? The big difference now really is the clients demanding it. We are a young country. We shouldn't forget that over 60% of the population is below 30, right? And today, any kid is just growing up with technology so much that the behavior, the culture, the usage, and the demands for that is just going to grow, right? So we also just have to sort of adapt to that. And as long as we focus on the right use cases and enable, as Kush used the word, right, then I think that's the key. And I think all COVID's done is, to me, it's a huge catalyst, if I can use that word, right? Demon was a catalyst for a couple of months. COVID's here to stay for longer. And if muscle memory and digital habits are built, then the longer it stays in that, only for that perspective, not otherwise. The longer it stays, right? Good habits will just stay, and you just build on it.
Yeah, great. Deepak, final thoughts from you?
Yeah, I think there are two things which are changing very, very rapidly. One is the customer preference itself. And I think we spoke at length about how COVID and the situation has accelerated or changed customer preference. And the preference is not changing for a particular industry. I think the preference is changing in general about what customers would like to do, be it with their money, be it with their time, how they would like to engage. And I think technology is getting very, very deeply embedded in customers' life like never before. The second thing that is changing very rapidly is the business strategy. So as there is a shift in customer preference and the business environment, I think business is going back on the drawing board to see, is my business model valid? How do I optimize on my cost, efficiency, productivity, risk, whatever are the metrics or the constructs of business? And I think anything that we today think from a business strategy perspective, again, technology becomes the core. So I think the way we are looking at it is, while technology does not drive, but technology is deeply embedded in whatever we do. I don't think today anyone accepts a solution which does not have a little bit of technology, if not full of technology. So I think we all have to start now finding the blend of where the business problem starts and how technology can solve that. And that means I think these two things will very, very closely coexist. That also means the technology people will have to understand business and strategy. And the people who are in the business or customer facing areas, they have to understand what technology can deliver. Because that's the only way organizations will be ready for the world that we are all getting into.
That's an excellent summary. All the lines are blurring. Bankers are becoming technologists, and technologists are becoming bankers and insurers. So, fabulous conversation. And let me just see if there are any audience questions. Nidhi, any audience questions? Or should we close the conversation? I think there was one audience question on India versus Bharat, but we covered that. So I think we can conclude our session. Thank you very much. Thank you, Deepak. Thank you, Jay, Kush, Mithun, Shankar, Sumit. Fabulous conversation. Thank you for all your thoughts. And let's look forward to a bright future for Indian banking and Indian insurance in the months and years to come. All the best to everyone. Take care.
Thank you.
Thanks, Vijay.
Bye.
Thanks, everyone.
Bye. Bye.
Thanks, Vijay.
Bye.